Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to introduce Mr. Darren Sinden, a market commentator for Admiral Markets. Darren, how the devil are you, sir?
Very well, thank you, Nick.
Just as we came to press, this is obviously all about Wall Street. I see that Oppenheimer, their technical analyst, has called the S&P down to 1970, a 5% correction, in terms of he's looking at market breadth. So perhaps we could touch on that tomorrow and just see if we agree or disagree with Oppenheimer.
Happy to do so. I mean, I think, just off the bat, we've said in the past we felt that the US equities might be overvalued and that there was significant divergence between some of the leading stocks and some of the indices. So, yeah, it will be interesting to have a look at that.
Might be worth having a look at.
I should report back.
Excellent. And just the second piece of that, I didn't realise the S&P 500 had only gyrated 3.5% either up or down year to date, which is basically never happened in recent times.
No, it has moved sideways, as you say, in that relatively wide range. All of which would sort of suggest that we may well be running
building
out of steam.
up for
and if lower for longer has been bullish for equities, if the Fed do move early and raise rates, even if it's only by a token gesture, presumably that could be a catalyst for a sell-off. We'll have to wait and see, of course, what they do.
As always. Okay, well, let's kick off this morning with a slide data released over the European session. What's caught your attention here?
A thin day as far as outright European data was concerned. We did have some data from the Far East, which I think is pertinent and worth looking at. So first of all, we had PPI for China in July, year-on-year read here, down 5.4% against the forecast of minus 5%. So
slightly worse than...
Well, yeah, and deflation would appear to be alive and well, at least on this measure in China. What's also interesting to note is that the change in the PPI in China on this basis has been negative since the early part of 2012. So it's nothing new, but it's just a continuing trend, and it appears to be well embedded, and it's going to be very difficult to shift. If we look at another measure of prices in China, we also had CPI, the Consumer Price Index data. This also for July, and again we look at the year-on-year measure here, came in at plus 1.6%. So that, surprisingly, was slightly better than a forecast of plus 1.5% and the prior read of plus 1.4%. Nevertheless, if you plot a chart of this over the sort of medium to longer term, you can see that this as well has been trending lower since 2008. So whilst we're slightly better than we were, we've still got a long way to go before we're sort of seeing prices rising in the Chinese economy by any great dramatic amount. And then staying in Asia, moving over to Japan, we had the Consumer Confidence Index for July, came in at 40.3, sharply below the forecast of 42.2, and the prior read of 41.7. Now remember, of course, that Shinzo Abe is trying to stimulate not only the export economy through weakening the yen, but also the domestic economy. And a falling consumer confidence, doesn't bode very well, I don't think, for that particular exercise. And then we come into Europe. We had the Eurozone Centex Consumer Confidence Index. This is an index that's compiled really trying to gauge social media sentiment, I believe I'm right in saying. So it's sort of a new age consumer confidence index, if you will. Anyway, the read for August in this data point comes in at 18.4, again sharply below the forecast of 20.2 and below the prior read for July of 18.5. This is effectively, or European consumer confidence by this measure anyway, has effectively been moving sideways since March of this year. So again, the ECB would have been looking for some signs of green shoots of recovery, shall we say, and again, consumer confidence is important to the ECB because they're trying also to stimulate not only the export market but the domestic markets
as well. Understood. Okay, so let's take a look at the European movers this morning.
Okay, well, I've just gone with a couple of metal stocks really. Mining stocks were better last week in London, we talked about that then, but this morning we looked at ArcelorMittal, that's MT, in Amsterdam, obviously one of the world's biggest steel makers. A couple of things to bear in mind here. They're €8.56, down about 1.5%, but they have been lower on the day. News at the weekend that an automotive joint venture they're trying to put together in India could take up to 2 years to come to fruition. I was just probably shows you the level of bureaucracy still involved in trying to do business in India. They're also weaker, I think, on the back of some of those weak China data points that we looked at earlier. It's also worth bearing in mind, though, that the stock had rallied from €7.68 to north of €8.50 since late July. So they have had a reasonable run, and I think people have just decided to take a bit of profit there, using those two data points and news points, if you will, as a bit of a catalyst. And then Anglo American in London, AAL, the ticker there, 784.8, down around 2%. Investec has a note out on commodities today. It's the second note really in just under a month, and it's revised its view on commodity prices once again. It says that these kind of price levels are the new normal, and obviously hand in hand with that, the weak China data earlier this morning hasn't helped, so they're down by around 2% on the day.
Understood. Okay, so let's move on to M&A, rumours and movers.
This was, till about 20 minutes ago, a story that was sort of about to be announced. It's actually come to fruition. So Berkshire Hathaway has launched a deal to buy Precision Castparts, that's ticker PCP US, for around $235 cash per share. PCP, they closed around $193 on Friday. They're up 20% pre-market, around $232.50. It's a manufacturer of metal components and products for both the aerospace and power industry, and it's the largest company in the US metal fabrication industry sector. Berkshire Hathaway, which is obviously Warren Buffett's principal vehicle, was already a 3% shareholder in PCP. Customers for PCP, the main important customers in the aerospace sector are Boeing and, as you might expect, Airbus. Despite slightly improving fortunes for that industry, the earnings at PCP have fallen short of street expectations. They reported as recently as the end of July. The stock had fallen from as high as $242 since December 2014. And it's really been dogged by a series of production issues, client stockpiling, and to
massive underperformance.
Yeah, look, it's underperformed the S&P by 30% over the last 5 years, and obviously that's why someone like Buffett's interested. He's a canny investor, sees value, thinks that something like this can be turned around, and he's coming with an attractive offer, which I'm sure most shareholders will
be delighted with.
They will do, yeah. So.
Okay, so let's take a look at US data points to keep an eye on.
Well, slim pickings today, I'm afraid. In fact, there's no data proper, but the Atlanta Fed Governor Lockhart will speak at 12:25 Eastern Time, 17:25 London Time. He's speaking in Atlanta. Remember, it was he who said that the data would have to be awful for him to vote against raising rates. So he's very much in the hawkish camp, and I guess the market will be watching for clues to see if he says anything further or expands upon those comments. So that's really it as far as US data is concerned. We have got some important data later in the week. You've got retail sales and PPI to look forward to at the back end of the week.
Understood. And let's round up with US pre-market movers and chart levels.
We talked last week about NVIDIA, a graphics chip maker, and how well they were doing, and it just caught my eye that one of their smaller peers, PXLW, was down sharply in Friday's trade, down 13.6%. This is Pixelworks, but there's a reason. They haven't reported bad results. They've actually taken the opportunity to raise some money. They're placing around 3.25 million shares at a price of $4.75. That was quite literally a 14% discount to the opening price on Friday, and they've come in basically in line with that now, and they're raising around $15.4 million for the business. So that's Pixelworks. What I'd like to look at there is whether they have a rally in today's session, having done that on Friday. And then another stock that took my eye, and we talked about the media sector last week as well, Lionsgate Corporation, that's LGF in the US, traded on Friday around $37.61, closed up 6.4%. They had, along with many other media stocks, starting with Disney, been given a good whack in the last week, but their figures and their production pipelines been reassessed after last week's sharp fall. It's also not escaped my attention that John Malone, who has a man with a finger in many cable and media companies, sits on the LGF board and has hinted at his interest in maybe doing some sort of consolidation in the content sector. So I just flag that he sits there. I'm not saying that they're in his sights, but if you were going to get involved in a stock, it might well be one where he already has a holding and an influence.
Right.
And in terms of levels to watch today, FTSE 66.74 now on the downside, plays 67.50 to the upside. FTSE is down on the day for choice. Was down well over 50 points at one stage. The DAX, 11,486 now on the downside, plays 11,550, really just searching for direction there at the moment. The S&P price action on Friday in the US markets was down on the negative side. I guess on the premise that if rates are rising quicker, then that's possibly bad news for equity markets. But 2067 now on the downside, plays 2080 to the upside, and for the Dow, 17,280 plays 17,380. Similar story to the S&P. We're really just trading the ranges here.
Treading water. In terms of the currencies,
again, not too much action from the early session in Asia and London trading, but 109.24 now is the downside level to watch on the euro against the dollar, and 109.70 the upside. And then in Aussie dollar, US dollar, 73.29 plays 73.80. So no real change there from Friday's levels. Same levels exactly in dollar yen. So we're watching 124.40 again on the downside, plays 125.00 on the upside, and that round number on the upside is a big level. So a sustained break above that will be a very important move.
Okay.
And cable, still a bit weaker for choice. The sort of supremacy, if you will, in the likelihood of interest rate rises seems to switch back to the dollar now. So 154.27 on the downside, plays 154.96 to the upside. But in fairness, I think you could say it's holding its own.
Understood. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you for that thought-provoking session. We'll see you on the 10 o'clock show tomorrow and the 1 o'clock Wall Street wrap. Okay, that wraps us up. Have a good day. Thank you.